You're not going to believe what's happening right now with YYAI stock. I mean, it's one of the craziest stories in the entire small cap AI and Web3 space. A mix of insider drama, sudden dilution, SEC complaints, and wild speculation online. And the more you look into it, the more it starts to feel like something big is brewing behind the scenes. Because this isn't just another random penny stock move. This one has real players, real filings, and possibly real money involved. And what's happening could either make or break investor trust in the company for a long time. So make sure you stick around till the end, because once you understand what's really going on with YYAI, you'll see why this stock is suddenly on everyone's radar. Now, here's the deal. YYAI, short for Yield Artificial Intelligence, has been through one of the most chaotic stretches we've seen from any small-cap AI or blockchain stock this year. Things really started heating up after a former major shareholder, Michael Belfi, filed a complaint with the SEC. According to the filings, his stake dropped from more than 20% of the company to almost nothing after an at-the-market offering and a reverse stock split. That's not a small adjustment. That's a massive hit. And some believe it might have been done intentionally to change his legal position as a minority shareholder before filing that complaint. Whatever the reason, it pulled YYAI right into the spotlight, because when a former insider accuses a company of questionable behavior, even without proof, it shakes investor confidence. Suddenly, people start wondering, is this a real company trying to innovate, or is it a web of corporate moves hiding behind buzzwords like AI and Web3? At the same time, this complaint has also drawn the attention of retail investors who believe that more regulatory focus could actually bring transparency. If the SEC digs into the company's structure, it might force YYAI to open up more about what's actually happening behind the curtain. But on the flip side, it could also scare away potential investors until that clarity comes. And while all that's happening, there's another huge piece of the puzzle, the AiRWA project. That's supposed to be a Web3 platform designed to tokenize real-world assets. Basically, taking things like real estate, art, or commodities and turning them into tradable blockchain tokens. Online reports claim this project could involve hundreds of millions in potential funding, with $100 million already pledged and talk of up to $500 million being raised. Those numbers sound massive, but as with most early-stage crypto projects, you have to be careful. Promises don't always turn into funding, and partnerships don't always turn into revenue. Still, if even part of that money is real, it could give YYAI a serious foothold in blockchain-based trading and digital settlement, an area that's exploding right now as investors look for new growth stories outside of traditional tech. But there's a reason investors are still divided. YAI has changed directions multiple times. It's moved from more traditional business operations to AI matchmaking tech, and now into blockchain and tokenization. That kind of constant pivot can be confusing for shareholders. It raises questions like, what's the company's real identity? What's their main product? And most importantly, can they actually execute on any of it? The company's communication hasn't helped either. In recent months, they've gone mostly silent, only filing occasional updates or online mentions of the AiRWA wallet and platform. That lack of consistent communication has made it tough to separate fact from speculation. Some of what's circulating online might be true, but a lot of it could just be hype. From what's publicly known, YYAI seems to be pursuing a partnership-driven model. That can be powerful if their partners deliver results, but risky if those collaborations don't materialize or fail to scale commercially. At this point, one of the biggest issues the stock faces isn't even about numbers. It's about trust. After the reverse split, dilution, and internal disputes, retail confidence is still fragile. Some investors even claim the company's float is tightly held by a few strategic players, meaning liquidity could be low and volatility could spike fast once trading volume increases. Now, that doesn't automatically mean a short squeeze or a breakout is coming, but it does mean that price swings could get wild, especially as long as information about ownership and partnerships remains unclear. There's also the bigger picture, the regulatory environment. The combination of AI and tokenization is still a gray zone for the SEC and other agencies. If YYAI's platform fits within future regulatory frameworks, that could help them gain legitimacy. But if regulators decide some of these models raise compliance questions, things could slow down or even hit a wall. So really, everything depends on what comes next, the next round of filings, platform updates, or confirmed funding milestones. If the company can show verified funding transfers, proof of real tokenized assets, or regulatory approval, that could start rebuilding confidence. But if the silence continues and the legal situation drags on, many investors may keep treating YYAI as purely speculative, not a legitimate growth play. Right now, YYAI stands at a crossroads. One path leads to a real comeback, the other to another forgotten microcap story. The pressure is definitely on, and sometimes pressure can either expose weakness or bring out the best in a company. Whether YYAI's ambitions in AI and blockchain actually turn into something tangible, that's what we're all waiting to find out, because this isn't over yet. Far from it. Disclaimer: this video is for educational and entertainment purposes only. It should not be taken as financial advice. Always do your own research before making any investment decisions.